Welcome back to the Eric Crown Crypto channel, and we are once again joined here by legendary Fibbo Swani, coming off of one of the most amazing calls I've ever seen in my life. He was calling back on this channel. This must have been, in the middle of summer, or maybe even the early portion of summer. $108,000 price per Bitcoin this year, and what do you know? Just a few days ago, we have seen that absolutely epic target happen, and now Bitcoin crumbling as the sky does fall. But we have Fibbo Swani to bring back here, and he's going to be going over his more long-term look. Of course, all Swani's socials will be in the link in the description below. And from there, I'm just going to hand it off to you, and let's see what you got.
All right. Well, Crown, thanks for definitely having me on here. This is awesome. The $108,000 call was back in May when we recorded, and I called it by the end of November, so I missed it by 2 weeks.
Oh, you're wrong. Terrible.
I quit. I'm done. No, but everything was going to plan. So everything and everything still is going to plan. So what I'm going to do is I'm going to highlight. I'm going to start out with some of these longer term timeframes and give you kind of that macro picture of where I think things are headed. Maybe a local top, maybe the cycle top, those kind of things. Now, again, this is not financial advice. This is just when you talk macro looks like this. It gets kind of nuts when you start modeling it and stuff. And if you've done any type of modeling, you know, the further you get out into time, the more risk there is, right? Of course.
Of course.
So take this as a grain of salt, but this is what we're going to kind of look at here. You get it? You know what I'm talking about.
I totally get where you're coming from. And I think just to relate it to the community here, I think most people in this community also get it. But of course, there's a lot of new people with the market in the way that it is. And of course, things can get maybe misheard, or if it's not exactly perfect, it can come off wrong. But of course, I think the majority of people know your sort of style and how things actually work.
Yeah, cool. All right, start out with the weekly here. I know there's a lot on this chart, and I'm going to kind of go through piece by piece here. But first of all, this we'll get to all the bull and bear zones later on when we look at some of the other earlier time frames. But definitely in the bull zone for the market, of course. A couple of things on here. One, I'm marking these lows before a rally. So you got a low before a rally here. And then you do this cycle to where we hit a low toward a rally, and then you got a low toward a rally, and so forth. That's going to be important as we look for possible local highs and some possible cycle highs. And then what I was just kind of looking at these angles just to see what kind of angles we were at. Nothing set in stone, but this angle is about 31%, 37%, 39%. Right now we're at about 33% angle at the moment. On some of these. So that's just guidelines for me. That's nothing important. So if you guys are asking, what's all those degrees for? I was just kind of looking at these latest highs to lows, or lows to highs, basically. And then we had these period of consolidations, and we had another low to high. So I was really looking for the low before the rally cycle is what I'm kind of looking at there. A couple of other things I have on here from when my bull zone started here. These fibs here, these black fibs on the side over here, are when my threshold theory goes into the bull zone here. And then these are the fibs that I follow based on where I would want to be, buying heavily on shallow fib areas. And in this case, it goes all the way down to 74.7 on the weekly, to where the market could go all the way down to 74.7 and still maintain a bullish structure. Not to say that it's going to go there, but that's the fibs that I'm following on here. So just so you know what these numbers are over here. Now, a couple of other things I have on here is some trend-based extensions. And what I'm doing is I'm measuring the low to the high here and then go down to that low, and then you get the fibs going up. And in this case, this last one, this period of consolidation before we broke out here, had a couple of targets that I was looking for. There was a zone between 111,000 and 118,000. And I have this horizontal line at 117, and that 117 comes from other charts that I've had, to where that was another target that I had past 108. So after this 108 hits and you take profit, and then this market comes down into some areas that we're actually buying at the moment, based on some of the shorter time frames, and I'll show you that later on. But what I'm looking at is a possible local high around that 117 possibility. And then all the way up to the 200% at 146. So I know that's a pretty large range. And the timing on that is based off of the, these degrees that I have here. And I got I got this January to March timeframe here between these two red lines here. And then I also got the October, November, December of
This is fascinating. This is absolutely fascinating. 140 is actually one of my major targets, and within that time frame too, which is really fucking interesting.
In between the January to March?
Yeah, Q1. Yeah, exactly.
Q1, yeah, Q1 timeframe. So basically, I was looking at two different things because the way my analysis has been going based on the fibs and where I put a lot of this stuff, and I tried to take like the behind the scenes was a shit show, and I tried to bring all these charts into a picture is what I've been trying to do for everybody because there's a lot going on behind the scenes, and then we'd be here for 3 hours of trying to explain it all. So I tried to put it in this nice picture. So what I did here was I put these two vertical lines, and that basically is the first quarter. So I'm looking at two different targets. One is the 117 to 118, and then the other one's all the way up to 146. So somewhere in there, I think that's going to be a top to look at somewhere in that first quarter. And if we kind of keep this angle going, the middle of that time frame is just what I'm kind of keeping that angle at the moment. Not to say that it's going to work perfectly, but I'm looking at that January to March time frame somewhere between 118 and 146. Now, that to me is not the ultimate high. That is not the cycle high for me because of all the timing, and I'll show this on a lot of other stuff too. But when you look at the low to low to low, if this gets into this time frame here, if it gets up to 118, then I think we'll get a little bit closer to basically, if we only get to 118 this first quarter, then I think we go into a much longer period of consolidation to where it's only 118 down to this 94, basically 94.9. And where that comes from is just the timing. So if you get up to 118, maybe we get into a little bit more of the sideways. If it gets all the way up to the 146, maybe we get up to 146 and then we crash all the way down to where I have marked June of 2025. And that's just because of the lows that we've seen here, the low to low to low. If it wants to keep the same pattern, then you're going to get a low in June. But the main thing is this trend line off these lows is going to be a major support guide for me. So anything, basically, if this trend line breaks to the downside, then we're an overall bearish market, primary bearish market. Then we're looking at much, much lower pricing. I don't think that's going to happen, but just to have safeguards.
There always needs to be an invalidation, of course.
Yeah, exactly. Right now the threshold for me is all the way down to 60,000 before this thing even breaks bullet structure, which is kind of nuts when we're talking 6 digits and all that kind of stuff. But
you think it's just now?
I know it's just so nuts. But
so much
but we got the 108 and we're getting a sell-off, which to me, I'm not surprised. I'm surprised on a little bit on how quickly it came down. But I was looking for, definitely a correction and not a crash. Everybody's like, the market's crashing. I'm like, no, it's called a correction. A crash is chaotic.
It's been pretty orderly so far, to be honest.
Yeah, a correction is something that has reason. A crash is just chaos, and I don't really see chaos right now. I think it's just it's a pretty large correction because dollar amount, it's scary as crap, but percentage, it's pretty normal. When you look at the percentage loss,
even on the lower end for Bitcoin historically.
Yeah, exactly. So to me, it's still a correction, not this crash or chaos that's going on to settle down the emotion that I've read.
Actually, I think a really good question to kind of pose right here, while we're in this, what could happen right now from this current price that would make you, I guess maybe not bearish, but just let go of all of these higher targets and have to reconsider? Would it be that 60? I believe it was $64,000 that you mentioned on the line.
No, actually, I'll have there's some levels on the daily that I
Okay.
have. So when we get to the lower time frames,
Gotcha.
there's some invalidation points that would
Okay.
say
Okay.
that I would
Yeah.
get out a lot earlier than 60K.
Yeah. Okay.
So yeah, I'll show you that here in a few. One of the other things I have on here is just the fibs off this latest run, which is in orange right here. It's probably hard to see, but the 38.2% level is at 85,700. So that's a level that I think we could get to on this drop.
Yeah.
And then come up from there, or we could actually be kind of finding that bottom, now off of a correction, and I'll show you that on some of the lower time frames. But the 38.2% level is a pretty key level to keep the trend going. So I like to hit that lower fib or that shallow fib before I do the 61.8% level. So that 38.2% level at 85.7 is going to be something really key that you'll want to kind of keep an eye on when we look at some other charts. So for me, I'm looking at 118 to 146 sometime in the first quarter, then a drop to this trend line to around 95 in June. And then after that, then we have this next rally up all the way up to I have a couple fibs that overlap here around 195 or so. And I think that's where I think I'm going to take profit if it rallies up to that point. I think you can get it all the way up to 210 as a minimum, and I'll show you that here in a minute. But I would definitely take profit off of my model here that would say that overlap of those Fibonacci levels is going to be the spot for me to take profit. Now, the 61.8% level at 155 could kind of come into consideration with this if this kind of all works out the way it should and that kind of thing. But the main thing is I just want to let people know what I'm looking at based on local top in the first quarter at 146 probably. But if not, 118, and then we'll just have a much longer period of correction. If it only gets to 118, if it gets to 146, I think we'll get a little bit more of like a quicker zigzag type pattern into June. It just depends on where you hit in that first quarter, really. But I'm just taking it from the middle. So I just want to kind of lay out some of those levels that I'm looking at going forward. So 192 would be kind of that level or 195 would be kind of that one level that I would really like to see as a local top. But I think it could get higher than that. But that's the spot where I would probably be taking some profit if it gets up to that point. Now, if you look at the timing of this, when you get into this low in June, and if it comes down to that trend line, and I'm just assuming that it would go down to the trend line. I don't know where it would correct back to, but that would make sense because if you move this up, to where if you get up that 146 or so, you got a 38.2% level there at 109, and then you got the 86.2. So it kind of falls in there in that range. So, and another thing is kind of interesting, even if it goes up to that point, this middle 80s it comes up a lot on different charts as an area of a pretty good floor to watch for on any dip, the dip today, the dip that's happening now, or if we rally back up to 118 or 146, the correction that could follow that could come all the way down to that point, right around the 85 to 95, somewhere right around there. But that's really all I really wanted to show on the weekly here was just the timing that I'm looking at. And if this all wants to hold true, then we get a local top first quarter, and then we get a cycle top later in the year, October, November, December timeframe, somewhere in there. But can it go up much higher? Yeah. I mean, it could go all the way up to 280, 290 if it wants to get kind of nuts. But I kind of like the 210 to 215 area, and I'll show you that on a couple other things too. This was one that I looked back there. This is a weird chart, and I'm not going to try to explain it forever, but what I did was all the different halvings on here. What I did was when the halving started, I put in the price action of each of the years. So when you look at, if you look at 2012 here, you got 2016, you got 2020, and then the black down here is the 2024 where we're currently at. And it's working perfectly because I had that 108 target at the point where it kind of dipped down here and everybody's kind of freaking out on the black line here, and then it started to come up. But as you can see, when you look at the blue and the red and the green right here, they all had that high in here, and then they started to dip down. So the timing on this was it was a little bit later than I liked, because there's a lot of other charts that go beyond this, but I just want to kind of show this as a picture that the 108 was supposed to hit around end of November, but it pushed just a little bit further into December here, but it hit the 108. But as you can see, I mean, it's probably hard to see, but all these different years kind of made a high at that time and then had a correction and then just went all gangbusters to the north after that. So if we hit this 108 as we did and come back down, all the other years after the halving had major bull runs after this. And I think that's where I'm getting into, even though we're correcting here, that 118, 122, 155, 146, 155, any of those targets could come into play from this point off the correction into that first quarter as we move into here. Now, a couple of other things I did was I put these trend lines on here of when the actual rally broke based on fibs. I didn't put all the fibs in here because it gets messy as shit. But when you put the trend line in here and it breaks, you can see the green broke right here, the blue broke right here, and then the red broke right here. And it's interesting because all those breaks are on this little cycle. So I'm looking. So when you look at this, if we get this rally up, and then I can't draw the trend line yet because it'd have to rally to get it. But if it rallies and we get this trend line in here, then the timing of this could be into this time period here where you'll get a high at, basically the highlight here is anywhere between this point and this point is when all those made highs, somewhere in this range. And that range goes from September of 25 all the way to November or so of 25. And that's where I'm getting that October, November, December timeframe of that possible cycle high, because that's when all these other years post halving hit their cycle highs. They hit at different times, but later they broke down at different times. So the way this kind of plays out is we can get up into this area in here where they all made local highs, and that's that March time frame. So when you look at that March time frame, I think we can get up to some of those highs, and maybe that's the ultimate high. I don't know if that's going to be the high or not. It could, but based on previous history, I'm just going based off of patterns. So you're looking at that March time frame as these local highs. So you had a local high in here, and then came back down and made a little bit of a high here. It's hard to see, and then the blue one had a high here, and then it dipped and then made another high. So you have some local highs in here, but then you also have cycle highs later on into the year. And that's what I was kind of wanted to show was the 108 hit the way it should. And don't look at any of these numbers over here. It's more of just measurements for me. I was looking at the distance between the high of 1 year based on the other. And I was just looking at if this moved from this percentage to this percentage, then this one should move to this percentage. And that's where the 108 came from. So if it was going to make a high, the 108 made sense for the time period. I was just off a few weeks, but I'm absolutely okay with that. That's really all I was showing on this was that you can get a local top in the first quarter and then get a higher cycle top later into the year. I know it's a mess, but believe me, that there's a lot more that goes on behind the scenes with this one, but I tried to put it in a picture for everybody. Let's move on to the monthly. A couple of things I have on here. If you follow me, you'll know that I follow a lot of trend lines and measurements from the trend lines. And one of the things I'm looking at on this chart was when you look at a trend line here and you take the furthest point underneath the trend line to the trend line itself, you take that same rate of change from the break point and gives you the target of where it should go as a minimum. A lot of times it'll run past it, but it's typically a minimum target. So it went up to this point, and then started to correct back. We got all the way back down to here to do a full retracement. So we went up, came back down, and retraced, and then we went on another bull run. So again, we had this trend line here that broke, and then you take that measurement, it comes in right at this 24 to 25,000 somewhere in there where it hit, but it continued further, and then I just took the double on this. So if it breaks back. If it breaks beyond where it should, you can take another another one to where it worked out perfectly off of this same rate of change, went up and made that high right here. Then we had another trend line here that broke, same kind of thing, measurement, and we broke up to this point, and then we take a double of that, and the double of that becomes the 117, which falls into that into that Fibonacci zone between 111 and 118 that we talked about on the weekly chart.
Mm-hmm.
So to me, as this came up and hit this target right here, it actually blew right through it right here, but then it came back down and retested right here. It wicked down through it, but it didn't have 3 settles or anything like that to break that support. So the measurement there becomes the 117 off the trend line break. But then you also you had this one leg up, and then you had another leg, and then you take this measurement here, and then take the trend-based extension, and then you look for that 111 to 118 zone is where that comes from. So the trend line break objective doubled, and then the fib extension falls into that 118, which makes sense for an area for that first quarter, possible high, that kind of thing. And then if that breaks through, and then you get the 118, 3 settles above that, and that'll be on the weekly also. So you get 3 settles above the 118.2 or whatever. You get 3 weekly settlements above that, and that's where that 146 will come into play as the 200%. And if you want to get even crazier, the 300% is at 195, and that kind of ties into some of those other levels I was looking at on those other charts. So trend line objectives, even going the other way, if you take the rate of change to the trend line itself, you take that, and this worked out perfectly right here. So there's something to be said with that. So I'm using those measurements as targets. And the other thing on here that I have on this monthly is these 30 bars that you see that I have marked here. What I'm following here is a 5 EMA and a 13 EMA. And when the right here on this one, if you go down vertically here, it's when the blue crosses up through the red. In other words, the slower or the faster moving up through the slower, and you get a bullish signal here. And then, as you can see, it never crosses and stays above it the entire time. But from that point to the high was 30 bars. So if you do the same thing here, and it crossed back down through here, and then you got the bearishness, and then it hit the target right here, and then it crossed again right here. So you take the from when the point when it crossed, and then it stayed, and then rallies on up. You get the 30 bars from that point, and then that ends there in December of 2025. If you want to keep that 30 bars, the 30 bars from over here is the same thing. It's just the start of I just don't have it on there. It's the start of the break of the moving average there. So there's only a 3 sample size, but if it wants to keep the pattern, 30 bars would be the end of the year, or basically December 2025. And that's when we can get up into these upper targets, the 195, possibly even higher than that when we go forward. So, and again, just like on the weekly, this is going to be the major support guide going forward. And of course, if the moving average, if the blue crosses back down through the red, that's going to be a signal. But typically that happens post high, of course, based on math. But if you get up to that point, then that's going to be a bear signal to the downside. But then if this gets all the way up to this point, and then you take a measurement of wherever the highest point above the trend line is, it'll give you a target to the downside. So in other words, if you go like, let's see here, right now it's this one right here. I got the magnet on. Hold on. Let me move this to there like that. Bring this down. So right now, that's going to be your rate of change. Now, if this ended up coming down and breaking the trend line there, you're talking a shit show. But I don't think that's going to happen. So as we rally up into these upper areas in here, and say we get all the way up to this 195, and then it starts to break down, even if it gets up to 146 as a high right here, and then it breaks this trend line somewhere in here. We'll just say if it goes all the way to the end here, that's when you're talking down into this mid 60s to 70 area. If it breaks the trend line at that point. But again, like I said, if it hits the high there, it's typically later post. So you're talking a break of this trend line back into, anywhere between, it's where those 80s come back into play. So that's why I really like this 195 area as a high at the end of next year, and then break this down and get a major correction back into the 80s. So I'm just going off timing here just to kind of look to see. But if this wants to stay true, 30 bars from when that moving average crossed over to when the high hits, I'm just going to follow that pattern and until it tells me otherwise. And then on this one, just another picture of the monthly, just a couple of the trend line targets. This one was just a trend line. Once this broke up here, this measurement brings us to 123, which falls, which just above the 122.5 here, which is basically your fibs from taking the absolute high to low. There's a couple of ranges that I like to see, this 83.5 to 91, which the top of this at 91.1 is something to really consider here, because that's the trend line break here. A little bit, I'm not super excited about trend lines that range upward like that, but if it's gonna go that direction, and hold this level of where we've kind of tested so far this month on a low, you get that, and we get a third monthly settlement above this. Now, this month likely will settle above 91, hopefully, and then we get that third settle. And if that's the case, then you're going to take the orange measurement, and then that breaks out to about 151 off of that. Now, remember, the trend line breaks are typically minimums. So it'll either get to that point or it could run further. So on this one, it could run a little bit higher into this zone. So this 123 could come anywhere between 122 and 131, and then of course the 151 could be anywhere between that, and the 200% is 165. But we'll have to kind of go with that 155. So which kind of comes into that 146 that I kind of like as a possible local high here in the first quarter. And then if that's the case, then what we'll do is we'll take, if all of that happens, then you'll get the low to high here, and say it gets all the way up to the 155. Your 38.2% levels right around 100,000. That's if it gets to that point. So if it rallies up to there, then you're going to come back down into, I had June before. Let's see where June's at. Yeah, I forgot this is a monthly. So basically you get up to this point, up into here, and then fall back down into there. Now, if it doesn't get into that 100K, let me see. Lost my thing there. If it only gets to the 122, then that's when the 38.2% level is at around 83,000. So, and that's where the low to mid 80s is coming back into play as a possible support target. So just another quick measurement there on the monthly. This one, I'm just using a modified shift. What do you call these freaking things? Fans or whatever the hell they call them. But the pitchfork. That's the word I was looking for. Yeah, modified shift pitchfork. That's what I was looking for. So what I'm looking at here is these darker areas in here are the fib levels of 127 to 141. Because whenever I do my fibs on my thresholds, whenever we get to the 127 to 141% range is typically that line of defense to give us a possible reversal. So as you can see, this rally went up into that area right here, dropped down into this point of support, came back up and retested, but then got close to there and then worked its way down. So once this broke, then it came down to this point, and then we worked our way up, blah, blah, blah. But what I'm looking at here is this line here. When you take the timing of this is, I took February, just kind of the middle of that first quarter. When you look at the high here and you take the pitchfork off of this line right here is at 125,000. And if it wants to get past that next line, or in other words, if it wants to take longer to get all the way out to December, there's a 155 here, but this 155 could be pulled over like this, to where it could work up into this range and get close to this one, the 1/4, or basically the fib extension here, to where that could be that last line of defense before it heads lower, and then before we get up to these upper highs. So that next level, if it wants to rally all the way up into the end of the year, that's coming in at around 208 on this, right on this intersection right here, which comes into that fib extension. So just looking at some targets on looking at it from a different angle. So you're just looking at the pretty much similar targets when you look at it from this way. And if it gets, and basically you're going to look at this level here. If it wants to get all the way back down to this point on the chart down to here, that's 65. But this next one right here is that mid 80s. So down to this mid 80s right here. And then if that breaks, then you would be looking at this next one down here, which puts us at 81. So you got an 81 to 85 range in here if it wants to dip down into this area here over as a low and into this area. But just showing you more targets. And now the reason
before you go on, I mean, to be fair, like mid to low 80s is not out of the question. Like Bitcoin from cycle to cycle typically has like a flavor of the cycle type of correction. In 2017 it was like 35%. Last cycle is a little bit closer to 30%. And this cycle corrections, like the major corrections, they've been around about 20 to 25% on the bigger, on the upper end. 25% down from 108 brings you to what, mid 80s, something like that. I mean,
yep, exactly.
It does make a lot of sense to me.
Yeah. When you look at the actual correction percentages, it absolutely makes sense. All right, last of the macro charts is this one here, and the reason I like this one, or I like 210 as a possible high here, is when you look back at history here for BTC, whenever we broke, I mean, I got a bunch of them on here, but whenever we broke the any of these highs, or broke a previous high into a new high. So, we broke into a previous high to a new high. This right here is a previous high into a new high. Every time that happened, the market always got to the 361.8% level. So every one of them. Now there was this one year that got to this point right here at 4,000 and then dipped and then rallied up much further, but it got to the 361.8%. So to me, if you get to this high, comes back down, and then once this one broke a new high, the above the 19,000 that we were waiting for forever, and then it broke to the upside, the 361.8% level was at 40,000, which hit and then came back down and went up a little bit further, and then same kind of thing. You got the high here at 69,000, came back down, and then once that broke into a high, that's where the 361.8% level hits 209. So no matter what time you look, all the way back down to when we were in pennies, if you go back and look, every time you made a new high, it always made the 361.8% level. Not say it's gonna, but if it wants to continue history, that's a fib level that I like, and I'm going to kind of continue to watch that to where the 361.8% level hits. So that's where the 210 comes in. But I also have targets based on my threshold theory and some of those from where I took the fibs to where I do the trend-based extension based off those fibs. That's where the 195 comes in as a target. So I would be comfortable taking profit there. And if it wants to rally to 209 because it has done that in history, that's fine. I'll take that. I will not complain.
So right now,
yeah. So I just thought that was very interesting, just because I follow a lot of fibs, and if it wants to get up to that point, I'll take that. I'll take 209 on the 361 or the 361%. Now, another thing that I like on here, I have these vertical lines on here, these dotted lines. It's really when I'm looking at this level on the RSI that once it clicks this level, and you look back at history, these are when a lot of these momentum, or you can't see it on here, but once this gets up into this point, and yes, it gets into a kind of an overbought condition, but once that hits, it gets into this nice bull run to make the high, and then starts to come back down. Now, once it gets down below this level right here, it does kind of a reset, and then once it gets back above that level again, right here, that's when it definitely dipped down, and people probably getting a little nervous, but it definitely didn't get down to a reset. So once this broke above this level, that's when the bullishness comes into the market. Now, there's a couple other points in here. You know, we went on this bull run, came back down on here. We had a reset right here. And then, but right at this level, it did not break the level I'd like to see right here. In other words, it didn't make a new high, as you can see right here. And then went back down, did a little bit of it didn't have to do a reset because it never really broke back above it. But it wasn't until this point is when it broke. And as you can see, it started to break a new high right here. And then we went off on a bull run. So if you look at where we're at today, had a reset down here, got back into this bearish area down in here, and then came back up. And then we broke back right at this point, has not went into a reset as it comes back up. So in other words, we should be on that next bull run to the 210 as long as this is holding here, and then this went into that new zone. So just a different way that I'm kind of showing my bull and bear zones, but just a way to say, like, this is basically when the bull run started, based on the RSI here and the momentum behind it and all that kind of jazz. But you could also, you know, take trend lines and those kind of things, like looking at this as the break point. So when you look at this going into this point, and you got the break point right here, that's where I kind of do those measurements on. See, the thing is with trend lines, anybody could draw them, right? But trend lines are easy, but they're hard to master. So in other words, when you draw a trend line, you need some validation on why that trend line is being put in the first place. So in this case, this one kind of has this breakout and a retest, and before it takes off. At the same time, this is happening. This is where the break point should be, and then that's when that trend line breaks. So that's why I'm kind of looking at this. So if you take the same rate of change and mark it to the upside here, you got a minimum. You got a minimum of that 140-ish, about 146, 147, which is nice because I think a lot of other analysis is coming in around those 140s, 150s, which I kind of like. So, but I like that as a local top, not a cycle top, because to me, the cycle top's got to get up to 209 if it wants to keep the pattern going from all the historical breaks to new highs, if it wants to keep that up. But again, don't know if this is ever going to happen, and you got to have your lines in the sand in case it breaks and those kind of things. And that's what brings us back to some of the lower time frames. So that's all kind of the macro picture. So to recap real quick, just so you guys know the numbers, I think first quarter, possibly 146 as a high, could only get to about 118, 120-ish. But I kind of like the 140s for that first quarter. And then the local top, I got a profit at 195, or not local top, the cycle top, I got a profit at 195, but I think it can get up to about that 209, 210 as a possibility. If the patterns hold true. Now, if we break some of these and the whole pattern breaks, then that's going to be a different story. And this is where this will kind of come into play here a little bit. Let's go back to the daily. Now, what I'm looking at here, now I'm going to focus a little bit more on the bull and bear zones, because these are going to be my guides to let me know, are we still bullish? Are we still bearish? That kind of thing. Now, if you look on here, the bull zone on the daily broke back in September 16th or so, or 18th, went into a bull zone and rallied up a little bit, came back down and did like kind of a retest But when it broke here, it came back down and didn't get back down into the bear zone as it was testing here on the break point, which is a good thing because then it keeps you in the market. So if you did buy this break, or if you bought this bull zone and it came back down here, you're either adding or you're holding, and then it went off to the races. So what I'm looking at is, and we have many trades going up here, because as this goes up to this point, as it dips, you're probably going to be buying, or I would be buying the shallow fib at 63. And of course, it went all the way down and scared me a little bit, I'm sure. But then it broke back up, and then we had another one here go to a new high, came back down and hit the 38.2% level. So you're actually buying again, keeping the trend going. And then you have this one that made another high, came back down and hit the 38.2% level, and you're going to be buying again, to where then, of course, you're going to have some take profit targets that I don't have on here anymore because I cleaned the chart up. But as you can see, it kind of stair-stepped kind of nicely as the highs were made to the 38.2, press my position, get me even more long. And then once it gets on that nice trend, you're just kicking ass and taking names, you know what I mean? And then you work up to this point, and then this is when we get onto this major rally to where this shallow fib doesn't even get close anymore, because we get a little bit more parabolic. But then we get to this high, and this is kind of where we're at today. The 108 hit, which was one level to kind of take some profit for sure, and then the 108.388 hit, and then we're on this correction to the downside. Now, a couple of things here on the daily are what I'm looking at is, one, the shallow fib right now for the daily is at 89.588. That would be a buy if it hits there. But then also, if you look at here at 92.5 is the bearish threshold. So it could actually dip to this 89 where I would be a buyer, even though it would go into the bear zone. Part of my model is that you have to have 3 consecutive settles underneath this shallow fib to bring it to bearish. So even though this goes into the bear zone below 92, if it does, it might not, and we might be getting support right here, which makes sense based on some fibs I'll show you in a second. But it could go below 92.6 here and go into the bear zone, but it's not fully bearish until you get 3 settles under 89.5. Now, if that happens, then we're looking down here at 77.9 for a possibility, for your next buy or those kind of things. But I don't look into that until I take things baby steps. I'm not like, well, it's going to 77. Not yet. It's not. So I'll wait for that. So right now I have a limit order in to buy there at the shallow fib. If it gets there. So it would be nice if it wicked down there and came back up, which would be very beautiful, which definitely could. But I think what we've already found some buying interest already off of this low, which was the previous low right here. But one of the things that I like on this is that the 127 to 141 range, that is typically where you want to see first line of defense. And you saw it try to get a little bit of a line of defense here, but it still held support right here without 3 settles underneath and then rallied up. So to me, with it finding support at the bottom of this range is a good thing. So that's a good sign that this could continue back up to where I can get into that 117 target that I talked about, or the 118, somewhere right around there. But 117 was that target that I had on my next target level to take profit above the 108. So the 117 is right there. So we're finding the support, and then the 117 will go up to that point. Now, if we get to if it actually holds there and rallies up to that 117, then the shallow fib's going to be moving up to about 95, which is smack dab in the middle of that zone, which would be nice to kind of give us a nice floor to look at for a possibility of higher highs up into the 300% at 152. But as we've seen on some of those other targets that we were looking at on some of those other charts, you're looking at 140s, 150 or 145, 146, somewhere right around there. But 152 on this, got 155. I mean, we're looking at pretty large ranges here because of what we're looking at, but you kind of get the gist of, that 140-ish area is probably going to be somewhere to kind of look. for a possibility there. So that's where I'm at on the daily here, and that's what I'm kind of looking at on where we're at in the market now. So right now, I have a limit order in there, just waiting for it to go to the upside. Now let's go back. So in other words, we're still in the bull zone even after this correction. We're not in the bear zone. Definitely getting down here, testing some support. But we're not going into that bear zone yet. But if we do, we need the 3 settle. So that's very important for my model. So if we go into the 4 hour, this is kind of where that scenario is happening when it comes to this previous shallow fib right here. Because when you look at this, if this goes into the bear zone, I would end up putting in, and just say that it did, just say it went into the bear zone on this move to the downside right here. What would happen is I would actually shift these over, and I actually mark these in red to where this level right here would become the previous shallow fib. So if we go into the bearish market, you would look at this level as your line in the sand, and then 3 settles under that would be your stop. So you would actually be buying this on a dip to that point, but then if you get the 3 settles, it would stop it out. So that's why I wanted to kind of show you there on that, because when you look at it on the 4 hour, that's kind of where we're at. When we had this nice run to the upside, and we hit that 108, the shallow fib right here is at 93.4. Is that previous shallow fib, which is a target that I had a limit order in at to buy while in the bear zone, because that's the next target to buy. So I bought there and dipped down a little bit, and now we've kind of rallied up and found some support right there. So that's my buy spot while in the bear zone. Now, what I would do with that position is hold on to it and press it as we get into a new bull zone if it gets back up and starts to make new highs. So that'll be kind of my foundation to get long again, getting back into this market going forward. Now, if it gets to this point and breaks down and gets 3 4 hour settlements underneath this, then that will be my stop on this to work to the downside. Now, these blue fibs. So basically, when you're looking at this is the zone that we're in at the moment. That's the wrong one. It's right there. When you look at this fibs going up on here, this is basically your bull zone that I'm looking at. When this breaks down, the 200% is right here, and that's kind of where that target is, and that's why I had a buy there. So what I do is I'll go back in history and look and go back to where that next target is, and you're probably looking right around this point, right here. So in other words, if you get 3 settles underneath this 93.4. And it breaks down, the next target under here is going to be the 84.2, which is the 61.8% level of this move. So you can get all the way down to this 84.2 and still maintain long-term bullish market, as we saw in the weekly and those kind of things. So that mid-80s could be a possibility if this ends up breaking with 3 settles underneath. If not, I'm long and I'm ready to go on that next leg to the upside if this wants to be the spot for a little bit of a turnaround, which would make sense because it's hitting a previous shallow fib or a major area of support on my system, but it also hit a 200% extension and a couple other things you could look at to bring some support in the market. Now you got some other levels in here you can kind of look at to buy, like 86 or 88 or whatever if it breaks to the downside. But the way I play it is I'm a little bit more conservative. If this breaks, I'm waiting all the way down to this level to get a buy back in. After those 3 settles. What would be awesome is if it actually just crashed all the way down here, got me filled, and then got back above that level before it even had the 3 settles over a 4 hour period. Hey, it could happen.
It's Bitcoin at the end of the day. Anything's possible.
Yeah, exactly. But right now we're getting some support, which I'd like to see, which is good. And then maybe we can start rallying back up to the upside, get back into a bull zone, get this thing rocking and rolling again. So real near term is bearish, but only to a correction into support so far. The daily still maintaining a bullish look and structure, Weekly is definitely holding that structure.
Mm.
So from the daily on, everything looks primary bullish. Now, the 4-hour definitely got a little bit of near-term bearishness to it, but didn't really signal overall bearish for that 4-hour time frame. If it did, most likely the daily would click into that bear. And then that's really my line in the sand, is if the daily goes into the bearishness, that's when I think we'll get into the 70s. And I would want to wait, to get into that shallow fib on the weekly, which is in that kind of that mid 70 area on there. So that's kind of my line in the sand. So I trade the 4-hour and the daily. The weekly and these upper macro time frames are just guidelines. I don't really trade those. I trade the 4 and the daily. So the 4-hour to me is the ins and the outs of the market as you're trading. But that daily is really going to give me that precursor of a possibility of a primary bearish market or not. But it's ultimately the weekly that needs to go into the bear before I would actually short the market or buy puts or anything crazy like that. So in other words, we got correction down to possibly mid 80s, maybe much larger if everything wants to break down. But everything right now is looking pretty supportive, even though it's dropped down as hard as it did. So I know I'm rambling here, and I've covered so much, and hopefully with only
a lot of heads exploding on this one.
I need more coffee because I'm still waking up, and I'm like, I don't even know what I said these last
It's beautiful, man. No, so, I think this has made a lot of sense. I think that this has flowed incredibly well. I was able to follow everything that you were saying, especially on the higher term timeframes. It seems like your general thoughts, your general analysis as to where things go from here, what's possible, I suppose. I think that's very, very clear. And that's of course what everyone loves. At the end of the day, though, like you said, when you're doing analysis very fucking far out, a lot of things can happen. It might not be exactly perfect, but the general trajectory, the general trend, I think that you showed is incredibly helpful. Lines up with a few of my things. I do have to say some of your targets a little bit higher than mine, even on the most bullish end, but I can very well be wrong on that, and I'd be very happy to be wrong on that as well.
And I very well could be wrong also. So that's why you got to
all reserve the right.
Yeah, that's why everything leads back to risk management first.
Right.
Not, have your lines in the sand and your plan, and stick to plan. And that's what I use the thresholds for. They let me know to get out or to stay in, or that kind of thing. So it takes the emotion out, but again, like you said, macro picture, anything can happen. Even though I'm going to toot my horn here a second, even though since we've been doing this for almost 3 or 4 years now with you, out of, I think 4 out of 5 calls, I've hit lows and highs.
For the 5 big ones,
big ones. So
like long-term ones. That's
so
why I say you are the best who I've seen who does it for the long term. Like I just have not seen that before, where someone's that accurate that often over a long period of time. I mean, like you said, we've been doing these videos since I believe our first one was around 2020. Then we started to do them very regularly from 2022, and this whole last bull market. We've been a lot kind of in lockstep, but you making these calls well before I was, and that was just fucking super impressive to me, man. So massive hats off to you. I think
I wanted to toot my horn there a little bit, but
of course, man, I'm happy to do it as well.
No, but the reason I brought it up, this is the main reason.
Yeah,
even though I've hit it 4 out of 5 times, does not mean shit when it comes to this next target.
Yep.
In other words,
you're only as good as your last trade.
Exactly. So I don't want people to think that if I'm 4 out of 5 on this, then this is almost a definite to happen. That's not the case. It can, and I'll be happy.
When you're right, you're the hero. When you're wrong, you're the devil. So.
Yeah, exactly. So that's why I kind of wanted to bring it up, even though it's been successful.
Yeah,
doesn't mean that it's going to 195 by the end of the next year, but I think it is. But we'll see. We'll see what happens, and we'll play it from there.
Absolutely, man. And of course, we'll have you back along the way. Like I say, whenever you want, you just let me know when you got something new. We're happy to have you on, man. I know the community here loves you, and I'm very happy to have you as a friend and a regular guest on this channel, man. So thanks again, Mr. Thibaut Swanee. You can find all of Swanee's links in the description below. He's very active on Twitter, TradingView, and then you also have your own trading group as well, where you kind of divulge your secrets with regards to your actual system, which I think people got a pretty damn good insight into it today. So awesome, man. Thank you so much. And we'll see you next time.
All right. Thanks, Crown. Been great.